All right, so what we do is we run comparables. It's called a Comparative Market Analysis. A CMA is a term in the lingo we use here in the Dallas area, but it's a pretty common term in all markets. And typically how we do it as a company is we take what we do, we call it a mini micro, a micro, a mini macro, and a macro search. Now, you don't have to do all that. That might sound overwhelming, and I'm not trying to overwhelm you. Let's just start with the mini micro search. This is how it looks. So we take plus or minus 5 years of the age of construction. So if it was built in 1990, we would take 1985 to 1995 comparables. Okay, that's one data point of the criteria. Then we start with plus or minus 10% of the square footage of the property. So if the property is 2,000 square feet, we would take, so 10% of 2,000 square feet is 200. So we would take plus and minus 200. So that'd be 1,800 to 2,200 square feet would be our data point. And then we would work out from there. I'll get back to that one in a minute, but we start with 10%. And then we like to see like bedrooms and like bathrooms. So if it's 3-2, we'd like to see other 3-2s that are comparable. And then we start usually with 6 months. So that'd be about 180 days. And then we work back to about a year, 365 days. And we like to do it in the same neighborhood, okay? Now, there's a lot of master plan communities here in Texas with a lot of different phases. I don't know if that's what your market is like, Deb, but if it is, you want to pay attention to that because certain phases have different lot sizes and different builder finish outs, which changes price points. So you want to make sure you really are comparing apples to apples, okay? So what you would do is start with that criteria and see how many yielded returns you get, okay? You want at least 3 is the magic number. If you have 3, that's a pretty good go.